Spirit Airlines' last full month of operations saw them post an $87 million operational loss. Would a fuel hedge have saved them? Spirit Airlines shut down operations on May 2nd of 2026. Due to recent court filings, we now have a balance sheet, profit and loss statement, and statement of cash receipts and disbursements for April 2026, their last full month of operating. Starting off with what is labeled as Part 1 of the filing, we can see the overall picture of the company and get an idea of the scale of the operations they were running. From this, you can see that Spirit started off the month with $460 million in cash and ended with $404 million in cash, taking in $293 million and dispersing $349 million. Total assets are $4.7 billion. Total liabilities are $7.85 billion. We can see they paid $13.6 million in professional fees related to the bankruptcy in April, and another $591,000 in professional fees not related to the bankruptcy. Going to the profit and loss statement first, we can see that Spirit posted an $89 million operational loss and a $327 million net loss. These financial statements are not GAAP conforming, but I'm going to assume they are accrual basis even though there is no confirmation of this in the filing. There's a multitude of factors as to why Spirit failed, and people will point to the customer segment they targeted or how they treated their passengers. But at the most basic business level, the problem was that their revenue was less than their expenses. So let's look at the expenses for April of 2026. Starting off, aircraft fuel was almost $112 million. That's about 47% of their monthly revenue. This was likely caused by the doubling of fuel prices from March to April. If we compare that to one of the most successful low-cost carriers in the world, Ryanair, we see that last year Ryanair's fuel expense was only around 37.4% of their revenue. Of course, Spirit Airlines cannot control the oil market, however they could have hedged their fuel costs. As a low-cost airline that focuses on leisure travel, hedging fuel costs should be a no-brainer idea because their main customers are cost-conscious leisure travelers. Leisure travelers book far out in advance and generally don't cancel their plans, unlike business travelers, who book last minute and usually pay a much higher price. This means that Spirit Airlines was locking in most of their revenue months in advance while not protecting itself against the possible risk of rising fuel prices in the future, and at the same time not having a customer segment that they could have charged to make up for the last-minute operating expense hikes. Fuel is the number one variable expense to an ultra-low-cost carrier, and is the difference between an operation working or failing. Looking at Ryanair again as an example, they've hedged 80% of their fuel needs at $67 per barrel through March of 2027. If we use Ryanair's hedge as a model for what Spirit could have done, we can have a better idea as to if a fuel hedge would have saved them. We'll start by assuming that Spirit could have hedged 80% of their fuel expense at their March fuel price, which we will assume was half the cost of April's, and the remaining 20% of the fuel expense will be bought at market price, which will be April's expense. Assuming Spirit could have done this, this would have caused their fuel expense to only be around $67.1 million, a 60% decrease from their actual fuel bill. This alone would have caused their operational loss to only be $44.5 million, a nearly 50% decrease in operational loss. There is no official cash flow statement provided, as the cash disbursement statement only shows what was received and spent from each of Spirit's entities during the month of April. So we'll assume that Spirit paid all the expenses in the months they were incurred. Doing that and backing out the depreciation and amortization, it's likely that in April, Spirit lost about $71.8 million from operations. Had they hedged their fuel, it's possible their loss from operations in April would have only been $27.1 million. It's said Spirit was looking for a $500 million loan before closing. Say their average monthly loss was $71.8 million going forward. That would mean that they'd have just under 7 months to fix their operations and become profitable. That's not a lot of time for an airline. Meanwhile, had their fuel been hedged and they were only losing $27.1 million per month, that's a year and a half of time. With 18 months of runway, there's room to cut the least profitable routes, raise prices, and get out of the aircraft leases that no longer make sense. But they didn't have the opportunity to do this. As of the end of April, Spirit had almost $490 million of cash. However, only $71.8 million of that was unrestricted. The rest was restricted due to already being in Chapter 11 bankruptcy. The issue of the fuel hedge alone wouldn't have saved Spirit, although it's possible it could have helped them. Another issue is that Spirit's management decided to build an 11-acre campus that was opened in April of 2024 and was estimated to cost around $250 million. Spirit is supposed to be an ultra-low-cost carrier. Tying yourself to an 11-acre property while your business has been losing money every year since 2020 shows poor management decisions. Had this just been a pilot training center with simulators that they could also rent to other companies to defer some of their costs, this would make sense, as in the recent past, getting simulator time has been a problem for some airlines. But this corporate headquarters was much more than that. Ultimately, there was no one thing Spirit could have done differently that would have fixed the company, but there were little things that could have helped put them in a better situation to become profitable again. The reason the $500 million loan from the federal government couldn't be secured by Spirit is that the government wanted to be the priority creditor for Spirit had they failed, and the current creditors did not want to lose their position, which is a rational reaction from them. Spirit's equity was already negative $3.1 billion, and the current creditors knew that the more debt Spirit took on, the less likely they were going to be able to recover, especially if they lost priority to a different creditor such as the federal government. Spirit's assets are now likely going to be auctioned off piece by piece. The most valuable assets are likely the remaining planes, as the current narrow-body production backlog is predicted to be over a decade. It'll be interesting to see how much of a premium the aircrafts go for. It's also likely that Spirit's brand will also be auctioned off, and in the future Spirit Airlines may return again. Below, you can find the links to all the financial sources I used to make this video. If you like this video, please like and subscribe, and feel free to provide any feedback on it in the comments.